We saw Bitcoin's price surge past $70,000 just yesterday. However, we did see slippage back down and have dropped by 4.53% since that high yesterday of $70,687. And in today's video, I am discussing the technical analysis on Bitcoin, sharing my thoughts and opinions as to where I think the price action is heading next. As I get into today's video, guys, smash that like button. I do appreciate that. If you're new, welcome, subscribe, and stay up to date with everything that we do here at Cheeky Crypto. Let's jump right down into today's video. So as you can kind of see, our range here of resistance is coming in at 69,709 to 72,167. This was from a week or two ago. We were tracking a three-wave movement from our lows here into this expected range just up here. From here, we were talking about shorting the market, and because we did not get the breakout situation, and we have a new lower low here on BTC's daily time frame. We can also look at a new lower high, here on the 27th of May, just yesterday, right? So we have consistently lower highs on the BTC daily time frame paired up with USDT. And unfortunately, this area that we were tracking the price of Bitcoin into the $69,000 to $72,000 has held as resistance. We did briefly talk about the potential for a breakout situation should we rally up into the slightly higher range and go into a new higher high on the daily time frame. Then we could go long, and we're talking about that potential move $78,000 to $86,000, right? That would have been the long position. At the moment, that is still technically a possibility, but we haven't had that breakout situation, and instead, our short position is the one that we were tracking. So going short here at that $72,000 or 69 to 72,000. And of course, at the moment you can see this is in pretty decent profit. And the risk reward ratio, if we were just to test down on that 50 EMA on the daily time frame, would be a 3.67. So some good profit being made on the idea of a short position if we were to be leverage trading this one here. And of course, if I am to be leverage trading, I'm only going to be using BitGet or Blowfin. They are my go-to exchanges when it comes to my leverage-based trades. If you haven't yet got accounts for those, the links are in the description down below. There's fantastic bonuses and rewards available, depending on where you live around the world. More terms and conditions can be found on their website, so why not check them out if you haven't done so already. So looking at our structures here, what do we see? Well, we can see that we are tracking a three-wave corrective pattern to the downside, okay, with our local high now being the move that we saw yesterday at the $70,687. This swing high is then going to be used to target out our swing low, and that swing low, if I just put this onto the correct number for our swing high here at 56 cent right there, we'll be targeting out this area just here, which will be between the 1.236 and the 1 ratio right here on the fib scale. Essentially, price-wise, we're talking 63,874 to 65,122. That is the expected range now here for BTC, okay? And that range essentially is going to be, unfortunately, the area that we need to kind of focus in on. Let me make this a little bit bigger so you guys can see exactly what I'm referencing. 65,755 is the wrong one. It's this one right here. 65,122, okay? So 65,122 down to the 1.236, coming in at $63,874. Okay, that is the range that we're going to be targeting out. And you can see how this will coincide with the 50 simple moving average, the yellow line coming through here, and obviously will just drop in below that of the 50 exponential moving average. Okay, so we can see those in there. This is a three-wave pattern, and I know a lot of people kind of don't understand or don't believe in Elliott wave theory, but we have enough evidence in our Discord server to prove to everybody that Elliott wave theory is a fantastic analytical tool in your arsenal. I just recommend people actually bother to learn it rather than just mess around with it and not actually implement it correctly. We have, of course, got ourselves these wave structures going on right here. Now, we are tracking these minor movements rather than these major movements. But as you can see, 3 waves down, 3 waves up. Our expectation should either be a breakout or a breakdown, right? But considering our structures here, we have to consider both of those scenarios as possibilities, and hence why I cannot rule out that $78,000 to $86,000 just yet. If we are to see a complete breakdown, then we should start to see a really poor move up from the 63 to 65K range that we're just talking about, and then another move to the downside that will be a little bit deeper, heading more into these lower ranges that we were talking about just a few weeks ago, around 53 to 56. Okay, so those are true possibilities. If we were to see the breakout situation, then of course, we are looking at basically going up into a new higher high on the daily time frame, and we're targeting out the $78,000 to $86,000. So how would I be trading this? Well, knowing that we have a higher probability of a move towards our 50 simple moving average for support, this would be my approach. Go long here, okay, with a potential trailing stop on this one, so that we don't get kind of stopped out. Stop loss on the trade would be lower than our range, preferably lower than the previous area of resistance. So we'll probably have to give this one a bit of depth to it. And this would be giving us a risk reward ratio of just above 1.5. And again, we'll just be looking to kind of bounce this one up a little bit and take some profit before seeing what the market wants to do next. At the moment, it's a little bit inconclusive. It can go either way. So let's go ahead and take a look at smart money concepts. Does that help us with an understanding of where the market is going? At the moment, on the smaller timeframes, we are bullish, right? We have got change of characterizations here to indicate bullish movements rather than bearish movements. So this is an indication that we might actually have another test of those highs, but I do expect us to move down first. And again, you can see the fair value gap down here. This is also within our range. We are talking about a fair value gap at 63,000 to 64,000. We could fill this gap out before rallying up, hence the need to have a deeper stop loss on any potential long trades that are going on. Our daily time frame is still showing rather bullish structures, as you can see here, with our break of structures and our change of characters. Everything is actually looking bullish on our daily time frame. None of that has changed. We're not bearish all of a sudden on the daily time frame or anything like that. The continuation pattern that we find ourselves in, to me, looks like it can continue, and we are above the 200-day exponential moving average. All of that is looking good, but we do of course have to consider the lower lows and the lower highs and the eventual breakout to the upside that will follow from that. It doesn't necessarily mean that we're done with the lower highs and the lower lows though, so we need to kind of consider what that might mean for the medium term. So let's turn smart money concepts off. Nothing else really note on there. Our stochastic RSI still has plenty of room to the downside, but it's correcting nicely. This is a positive sign that a local bottom is due, and we're likely to find another surge to the upside on the daily time frame. You can already see that we're oversold on the 1 hour and 4 hour time frame, so expect a bit of a pump in the next kind of probably 8 to 12 hours or so, something like that. We'll probably see another resurgence back to the upside. Not surprisingly though, because of course we have obviously seen a 4.5% drop already on BTC, and so an expected push back to the upside is kind of pretty basic and pretty much expected, I think, by most people. If we take a look at the divergence indicator, you can see the RSI, the yellow line coming through here, is also corrected down quite nicely, still above the 50 level, so we can still resurge, we can still continue this move back to the upside. So yeah, I think we've got plenty of momentum still available to us to continue pushing upwards. But again, those resistances are true, and if we continue the way that we have been, we'll run out of momentum and we will start to actually see the bigger corrections. There's no divergences being seen here, so we're not concerned over any hidden bearish divergence or bearish divergence, bullish divergences or anything like that. And so for the most part, we're actually looking okay, and there isn't terribly too much to be too concerned with here on the daily time frame from all of that kind of point of view. Roll this up into a weekly time frame. Here you can see the price action without a lot of the clutter, and we are above the 50 weekly EMA, the 50 weekly SMA, the 200 weekly EMA. All of those are really good positions, as in the price is well above them, so we're not terribly too concerned about any of those things whatsoever. Smart money concepts also shows us that we're still in bullish times. We're not concerned about those, and yeah, we are just looking for the potential moves here to kind of play out. We are waiting for confirmation from our ranging market. The lower highs, the lower lows will give some traders a bit of a bit of, I guess, fear in the market. They don't necessarily want to just trade in. We'll be looking for the breakouts or the breakdowns and trying to trade those accordingly, as we should. We have got a weak high indicating that we are likely to go up into new all-time highs, and I do agree with that. I do think we are. The structures that we are seeing right now are very corrective and was kind of expected after the BTC halving. So I don't think there's anything terribly too unusual that's occurred here. It's pretty much business as you would normally expect to see it. If we do go ahead and bring up our stochastic RSI, you can see we've got plenty of upward momentum available to us on the weekly. So again, we're looking for some fantastic runs to the upside in my humble opinion. If we take off the stochastic, throw on the relative strength index, you can see we're just out of the overbought area, and we can potentially rally up even further back up into overbought, as we have seen previously. Just take a look at where we were back here in January of 2024. Take a look at where we are over here in May of 2024. We can see this potential move back up into this higher range. And again, that's going to show us with new all-time highs, in my opinion. Other than that, there isn't actually terribly too much to kind of discuss at this stage. I think you'll be expecting to see more volatility for BTC. I'm expecting to see kind of come down towards that kind of 63, 65K range. And if we can get a breakout, then we should be heading out to new all-time highs between 78 and 86,000. Complete that, and then I do think we're likely to see a bigger retracement, and that retracement I think is likely then to take us and retest some of the previous areas of resistance and turn them into support. So for the most part, I think I want to be bullish on the market. My personal kind of thoughts and opinions are I want to be bullish on the market. I think there's inconclusive data for that though, and I think we should also be very open-minded to the idea that Bitcoin is likely to see a retracement before we get up into those new all-time highs. Personally, I would rather we just went straight up into new all-time highs, but unfortunately, I don't think that's what the market is going to give us. You can let me know your thoughts and opinions in the comments down below. And if you have found today's video useful, smash the like button. If you're new, subscribe and check out this video right here to stay up to date with some of the other projects that are going on in the crypto space.